Pfizer, ticker PFE, is currently trading at $28.18 per share, and over the past month, the company is up by 7%. Now, if we have a look at the maximum graph, we can see that the company has had its ups and downs over the past 10 years or so, trading at about $30 per share in 2016, 2017, and 2015, and then jumping up all the way to about $60 per share in 2022 after they came out with their COVID vaccine. Now after that, the stock started plummeting and plummeted all the way down to its current trading price. Now in today's video, we will have a deeper look at Pfizer and figure out whether its intrinsic value is sitting above its current trading volume. And to do this, we'll have a look at my stock valuation spreadsheets, where we'll have a look at the 9-pillar analysis and calculate the company's intrinsic value using the Graham's formula revised, discounting cash flow model, multiples valuation model, and the dividend discount model to figure out the ultimate valuation at the end of the video. Now, as always, if you do like these spreadsheets, you can access them at my Patreon, which I have pinned in the link in the description. Now getting straight to the valuation, first we'll jump to tip ranks, where we can see that the company is currently rated as a hold mostly, where 9 analysts rate the company as a hold and only 4 rate it as a buy, with the highest rating sitting at $45 per share and the lowest sitting at $27 per share by April 2025. With the average rating sitting at about $31.70, which is a 12.5% upside from the current trading price of the company. Now, do I think that analysts are correct most of the times? No, but it is always a good thing to have someone else's opinion on the company you want to buy. Now jumping back to my stock valuation spreadsheets, I will plug in the ticker symbol for Pfizer, PFE, and all the metrics will show up automatically, which is the magic about these sheets. You don't need to plug in anything external. Everything shows up automatically. Everything is connected. Everything is scraped from the web. Now right away we can see that the current dividend yield for Pfizer is sitting at almost 6%, with a dividend payout of $1.68 per share per year and a trailing payout ratio sitting slightly above 50%. Now the analyst target price here is sitting at $36 per share, and the beta of the company is sitting at 0.64, which means that the company is slightly more volatile than the overall market. Now the institutional ownership of the company is sitting at 70%, and we will get back to this in a moment. Now we can move to the 9-pillar analysis, where we can see that only 2 of the 9 pillars are in the red. Now the 5-year PE ratio of the company over the past 5 years is sitting at 30.83, which means that the company might be slightly overvalued over those past 5 years, which might be true as we had that huge surge in price over the COVID period. Now the price to free cash flow of the company is sitting at 9.57, which is great, and the long-term liabilities over the 5-year free cash flow negative dividends is sitting at 2.24. which means that the company doesn't have an issue with paying off their long-term liabilities while paying out their current dividend. Now we can see that the net income, revenue, and free cash flow have all been increasing over the past few years, which is great, and that there has been consecutive dividend growth of about 6% over the past few years. Now having a look at this middle metrics, the decreasing shares outstanding, we can see that the company is currently selling out shares, which is something I don't really like. I don't really agree with this, as if we have a look back at the stock screener, we can see that the company is currently trading at quite a low price compared to their history, which means that if they were to buy back shares now, the company would have a higher institutional ownership, which is always a good thing. Now moving back to the 9 pillars, we can see that over the past 5 years or so, internally the company has been doing very well. And the 9 pillars is something I see as a must when evaluating a company, even when you're trying to figure out its intrinsic value. So we can go to the Graham's formula revised, and here we will use the Graham's formula. We'll take the earnings per share, the base PE, the 5-year growth estimate, the growth rate multiplier sitting at 1.5, and the average yield on A corporation bonds and the current yield on A corporation bonds, which is currently sitting quite higher than the short-term average yield on A corporation bonds, and we get an intrinsic value of $45 per share when using this formula, which is currently 37% higher than the current trading price of the company, and with a margin of safety of 10%, the acceptable buy price would be sitting at about $40. Now this is only for the Graham's formula revised. We will now jump to the next valuation model, which is the discounted cash flow model. And here we take the free cash flow over the past 10 years or so and calculate the average growth rate to be sitting at 3.63%, with the analyst's projected growth rate over the next 5 years sitting at 1.5%. I calculate a growth rate of 2%. Now using my calculated growth rate, I calculate the future free cash flow of the company over the next 10 years or so, and then using the discount rate, which I have plugged in at 7%, as that is my desired return rate, I calculate the present value of that future free cash flow. And using that, I sum up all of that future free cash flow, add any cash and cash equivalent, subtract total debt of the company, and get an equity value, which I divide by the shares outstanding, and get an intrinsic value of $36.99, which is quite higher than the current trading price by about $8 or so. Now we can move to the multiples valuation. And here we actually compare Pfizer to companies which are in the similar sector, which lets us know whether the company is doing good compared to its peers. Now we take these companies' current stock prices and divide by their current earnings per share to get their PE ratios, which we then average out and compare to the PE ratio of Pfizer, or in this case we actually compare the earnings per share. And if we have a look at the earnings per share, we can see that Pfizer is currently sitting at 0.82, and that actually gives us an intrinsic value which is lower than the current trading price of the company by about $4 or so, sitting at $23.78, which means that the company might be overvalued compared to its peers. Now moving to the next valuation model, the dividend discount model. Here we calculate the intrinsic value of the company based on its future dividends. And so we take the historical dividends of the company and calculate the average growth rate. Now the average growth rate is sitting at 5.75, but we can see that over the past 2 years, the company has been upping their dividend by only about 2.5%, and that's why we'll project a growth rate of 2.5% into the future. And using this and the next year's dividend, I will calculate that the intrinsic value of the company is sitting at $40.51. Now we can finally move to the ultimate valuation, where we average out the 4 valuations we did prior and get an intrinsic value of $36.58, which is about 30% higher than the current trading price of the company. And with a margin of safety of 20%, which is a margin of safety I generally like to go with, I get an acceptable buy price at $29.26. Now, by looking at the company internally at its history using the 9 pillars and calculating its intrinsic value, we can now say that it might be a good idea to buy this company at the current trading price. Now, to be completely transparent, I did buy into Pfizer about a year ago, and I kept buying as the company went down, as I do believe that the intrinsic value of the company is higher and that over the next few years my investments will return and even up. Now, I hope you enjoyed this video. Let me know down in the comments which company you would like me to evaluate next, and make sure to leave a like and subscribe. Check out the Patreon if you like these spreadsheets, if you find them helpful, and thanks for watching.